using market breadth and sentiment in this stock market crash scenario. So let's have a look here. We've got the S&P chart here. This is the monthly chart. We had the key reversal a month or so ago. So there's our key reversal bar. I talked about this at the time when I did the video on key reversal bars. Made new highs, closed below the low of the previous bar there. Anyway, so we all know what's gone on in the stock markets worldwide, but certainly there's the potential for the S&P to overall go lower, the stock markets to go lower again yet. They're off a little bit. We'll go to the daily chart in a moment. Because when you look at the S&P and you put it into perspective of what it's done and achieved over the years, it's done a huge retracement in a very short space of time. But in the grand scheme of things, could it still want to retrace more yet? But long-term investors, it's probably a good time for them to start dipping their toe in the water, because that's what they do. They don't have to worry about stop losses and things because they're investors, and they'll be sticking their toes in because when you get to periods like we've got at the moment, where there's lots of fear and pessimism all of a sudden in the markets, then that's when your Warren Buffetts and the like start snapping up what they believe to be great value stocks. But for us traders out there, what are we using with this information? So we know that the S&P's had a good run. It's come down. It's breached the 2018 lows. And we're having a little bit of a bounce. Let's take it to the daily chart and then let's have a look at some of these other measures. So the daily charts, in fact, we did like a Shanghai duo over the last couple of days where we get a hammer candle followed by a doji candle. It can be the other way around, but that's what I call it. And a potential reversal signs purely in candlestick analysis, getting two sort of reversal candles coming back to back. But more importantly, it's the breadth. So I've talked to you about the McClellan oscillator of late, and going down. If it goes below 200, it's a sign of reversals. And we've had a number because the market fall off has been so severe that it's been getting below 200 frequently, and that's what happened in the previous bear market back in 2008-9. But we haven't seen it as much in recent years. It happens now and again when we have a bit of a sell-off, but obviously we've seen it a lot recently. But interestingly, what I found is that we've been getting the last close below minus 200 was back on the 12th of March, so a week ago or so. And in fact, even though the stock market, the S&P's come a bit lower, if we go back to that daily chart, if I just bring it, I'll just click it on it here. So although we've come lower since that last reading, the breadth has not continued to weaken. So that was a sign that maybe we had a bit of a, the market was certainly from a breadth perspective not as weak. And what I mean by that, for anyone who doesn't understand, breadth is when you're looking at the underlying stocks within an index or stocks within a New York Stock Exchange. So the underlying stocks with the McClellan oscillator are the 3,000 stocks that are in the New York Stock Exchange, and if they're not all making new lows, then that if we go back to the McClellan oscillator, then we stop coming down below minus 200. And so that's basically what's happened in the last few trading days. The breadth has started to pick up, so some stocks were starting to bounce a little bit. So that's the first thing. The other thing to bear in mind is the VIX, the volatility index. So that's based on the options pricing. If we go and have a look here. Now the volatility index, the VIX, if I take this out to a larger time scale, you can see how high we got to. We got to a massive panic reading just this week. Right away, got as high as it did in the height of the financial crisis, the great financial crisis in 2008-9. So we've hit a major milestone, and it doesn't mean to say that this can't go higher, but it's still something that we can measure against and say, wow, the volatility index has reached the same heights as back in at that time. So again, a potential therefore for maybe a bounce in the stock market. So let's take this back to my e-signal charts. And so we've got some candlestick reversal type candles, and then a little bit of strength coming in today, but it wouldn't surprise me if it doesn't do too much going into the weekend, and then maybe we have a little bit more to and fro, and maybe a bit more upside coming into next week. But I'd be very wary of holding an S&P or any stock index position going into a weekend. You can do it, but providing you're in a small position, because the potential is always there. You never know what comes out news-wise over the weekend at the moment, and then it gaps down against you on Monday. So very, very, not very easy, very difficult to hold a position going into the weekend, unless you're in a very small position and you can afford for it to gap down against you. So, but nevertheless, interesting information here today, based on the market breadth there. Also, we've had extreme readings in the put call ratios as well, where all of a sudden the amount of put buyers is massively skewed compared to the amount of call buyers. Not surprising again, when you see information like that. But you still get to points where the market on one side gets a bit skewed. So that's my little bit of analysis for you there today. I'm always looking at the McClellan oscillator when the markets are going down, because it does give me an indication of when breadth is reaching an extreme. And I thought it was an interesting chart of the volatility index there as well. So stay safe out there. Plenty of trading opportunities, loads of trading opportunities at the moment, left, right and centre. But at the same time, make sure you stay safe and don't get too excited, because that's when all of a sudden you can overtrade in these markets as well. Take care for now. See you next week.